On most of the days in the past week, the rupee's trading range was confined between 75.50 to 75.70. While we expect the 75.00 resistance to hold, the 76.30 support may be tested in the coming weeks as the virus spreads and death tolls are increasing in India, and the domestic macroeconomic data being released is also not encouraging to test the rupee's upside anytime soon. India's manufacturing PMI fell to 27.4 in April from 51.8 in March. The latest reading pointed out to the sharpest deterioration in business conditions across the sector. Also, the COVID-19 nationwide lockdown is affecting the business conditions in the market. Services PMI plunged to 5.4 in April from 49.3 in March, which underlined the pandemic's sweeping impact across India. Rupee registered a low of 75.80 on Wednesday last week, and a significant rise in local stock index fueled the rupee to test a high of 75.26 on Friday before ending the week a bit higher at 75.55. All the macroeconomic factors paint a negative picture on the economy, signifying a gradual fall in the rupee exchange rate. We expect to see more problems with the continued lockdown, though we are seeing some relaxation in lockdown 3.0, and getting back to normal seems to be a tedious one. During this week, we expect the rupee to broadly follow the trend in the Asian currencies, and the domestic currencies trend shall also be aided by the performance of local stocks. The significant rise of 14.42% in the BSE Sensex in April 2020 had a limited impact on the rupee. During the period January to April 2020, the BSE Sensex fell by 18.26%, but the fall in the rupee exchange rate in the corresponding period was 5.23% in absolute terms. Fed left the funds rate near zero and repeated a vow to use its full range of tools to shore up the US economy. The spread differential between the 3-month and 6-month LIBOR is 20 basis points as on date. The swap spread between the 3-month USD LIBOR and 5-year USD fixed swap rate is almost nil as of now. Though the investors remain focused on reopening of the US economy, the investors are equally worried about the fears of the second wave of coronavirus cases. Hence, we expect the global stock market to trade highly volatile in the coming weeks. The expected gradual rise in the BSE Sensex in the coming weeks, supported by a gradual up move in the rupee exchange rate, which could retest the 75.00 fifth resistance in the corresponding period.